Good morning, ladies and gentlemen. See, the goal of these videos each and every morning is to pretty much tell you guys everything that most people are watching in the stock market as quickly as we can. So that being said, let's get right into this video. Today's penny stocks are going to be LLIT, DSS, GRIL. Those are really the three main penny stocks that people are watching today. And I gotta tell you, they pretty much all look like garbage. So let's quickly run through them so you guys have a little bit of understanding about them. All right, so the first one we have here that we'll discuss is LLIT. And we're just going to tell you to stay away from it. And the reason being is because you can see down here it has this purple circle with that like check mark through it. That's called a reverse split. Every time there's a stock that pops up pre-market and it has that little purple circle to it, if you're on Thinkorswim, but just in general, if it has a reverse split to it, you just normally stay away. The stock will normally trade like garbage, okay? So even though it's a really big gapper this morning and it has some volume, your best bet is just to stay away. Next one on the list, GRIL, Grill, okay? So here's another stock that had already made a good run pre-market. So the bulls had their fun early pre-market. We did a double top scenario. The short sellers or the bears had their fun pre-market. Now we're just kind of into some sideways consolidation at this point. Now, believe it or not, since the stock dropped down from the highs pre-market, this actually makes it a little bit better to watch for a dip long move to bounce back up. So in the event this ends up basing out, you're going to pretty much want to target around the 265 price for your first long target, and your first support system is going to be 222. So we could very well see GRIL dip all the way back down to say 219, 220, hold support, and then push back up towards the 265 price. There would be nothing erratic or, there would be nothing erratic about that move. That would be completely normal. So the goal would be to see GRIL through 265, targeting more up towards like 310. But for the time being, you're really just watching down for a dip base around 220, for a move more up to the 265 price. Anything above that is just butter, right? Icing on the cake. Next one on the list is going to be DSS. So DSS has already made a good move after hours on Friday, a good move pre-market today, and we're still holding up really well. Now, this is one of the best looking ones pre-market in terms of pattern formation, okay? Looks pretty good. Now, if we take a look at the long-term chart, let's go to a daily chart. Stock is downtrending, all right? And if we go to the 4-hour chart, same thing, stock's downtrending. If we look at the past, this thing is known to spike and crash pretty much same day or very soon thereafter. So we don't anticipate this to turn into like a 5-day hold or a 10-day hold. It'll probably be a 1-day wonder stock where it has a good day, and then by the end of the day or the next day, it's going to be crap out, okay? So we're not really looking to play this and hold this very, very long. Now, the good thing about DSS is it has a low share float, and it also has a low outstanding share count. There really isn't a whole lot of news on the stock this morning. The only really news we have is that they have beaten their same sales from last year. Q3 year over year sales are up to 4.2 million, when last year they were 3.5 million. So that's really the news here. To be honest, I don't even feel all that happy-go-lucky about this stock myself. We're kind of high pre-market, and we've already hit some major resistance levels on the long-term chart. And if I may, I'll show you just real quick. So if we take the news down and we go to the 4-hour chart, you're going to see we've run right into trending resistance here. That white line in the middle, that's trending resistance. We ran right into it. So either way, I'm not extremely excited about this, but we'll watch it. If it has a move and we can trade it, we'll be in on it, all right? Now, the next thing I want to point out is the stock JMIA. This thing has really been cruising lately with a lot of strength, and it just got pretty much a suggested price target of 100. Stock's trading at 18, 19. It got a price target suggestion of $100 a share from Citron Research. If you're not familiar with who Citron Research is, you might as well just take a second to look them up and then get a feel for who they are. But they have a really big popularity base, and so whenever they say something in the market, a lot of people turn ears and start listening. Therefore, just by getting the notable mention from Citron Research, it could essentially cause this thing to jump just on rumor, right? So that being said, we are going to be watching JMIA over pretty much the next couple weeks, but to begin with, we could see this move up to maybe the 21 to 22 price a day, but if it gets there, we're probably going to want to be actively short ourselves for active intraday moving. Now what I want to do is we're going to take a look at our large indexes. We're going to go over the S&P 500, we'll take a look at the Dow Jones, we'll take a look at the Russell 2000, and we'll take a look at the NASDAQ. So we're pretty much going to give you an overlook on all your major indexes. We'll touch on gold, we'll touch on silver, and we'll touch on the dollar, and then we'll finish up our morning recap, okay? So here we're going to move into more of our large cap stuff, so let's go take a look at the SPY. Right now, the SPY has yet to actually break support. We've gone with another kind of gap down, rollover move. 4-hour chart, or excuse me, that's wrong. Daily chart. Okay, look at the daily chart. This is a 1 year, 1 day, so 365 days. And we are going to zoom in. You see that dotted line going up? That is our support level, okay? And then we zoom into the 1 minute chart. That is where that's at, right there. So a break below that dotted red line today would be a break below our yearly chart support for the time being. So that's what we're watching for. We're looking for to see if this market is going to successfully break below 340.50, give or take, and close below that level today. If in the event we're closing below 340.50s, we could argue that this stock or this market still has some weakness, okay? If we do that, if we close below that price point, our next nearest price target, I believe, is going to be, hold on, it might be different. Yeah, sorry, if we close below that price point, really our next closest level that we could target is going to be $332 on the downside. That would be our next support system, all right? So 332 on the downside will be our next support system if we break 340.64, all right? As in, if we break this point, we go all the way down to here, we should get some sort of support action to play off of there. Right now, on the upside, our resistance is 347.15. So unless you get through 347.15, you will not be seeing a breaking out move. You might see some bouncing action, but your stock will not break out, or the SPY is not breaking out unless we're back up and over 347.15. Let's go to the Qs. All right, so when we go to the Qs current support is the low of that red candle right here at 280.69. If we go to the daily chart, you will see that we have been holding right here on that trend. See this trend line going up? Ding, 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 ding. We bounced there before, and now today that price point is like 280.65, 280.70s. So if in the event the Qs or the NASDAQ can get below the 280.65, 280.70, give or take, and close below that price point for the day, that could suggest that this market or the NASDAQ is seeing extra weakness. So let's go look at the 4-hour chart. The Qs will not break out again unless they are over the price of 294.42 right now, okay? So unless the price comes back up, goes over 294-ish, 50, we're not breaking out to the upside for now. When and if the price breaks below, as we mentioned, previous support of 280.60s, 280.70s, our next target on the downside will be 277.80, right there, that dotted line. That's where we would also look for this to snap. Because if in the event we break the support here, we'd probably have enough selling to the point where we could easily go through that price point too, because it's so close to the support that just broke. So we kind of see that happen quite often. So let's say we break through both of those little mini supports. Next level down that we'd be able to target, I believe, is 264.60. Yep, yeah, so if we broke all those points, next support down for the market on the Qs would be 264.46. So the way we look at that is markets are decreasing into what's currently support. If we break that, we could shift the pendulum and swing negatively all the way down to 264.80. If in the event we swung all the way down to 264.80, we would look to be more long bias on the stock or this ETF or the NASDAQ as we got down to about 264.80. All right, now what we'll do is just take a look at the Russell 2000 because why not? Russell 2000 has actually been performing pretty well. If you look at how the small cap index is performing in relation to the NASDAQ and the SPY, it's actually better. So we won't put too much emphasis on this, but for the time being, the target on the upside before you can break out is going to be 1663. So let's put it 1663.65 right there. Through that is going to be your next breakout point. So you can't really break up too much more unless you cross over 1663.65, and you're not going to really break down much more unless you go below 1580 there. Okay. Now I want to quickly touch on the dollar DXY, $DXY. In the news, mainstream media is pushing that the critical level for the dollar is 91.75, which is obvious because that's the low, okay? But really the critical level is this 4-hour downtrending price right here. You see it's at 92.45. That's the critical level because if in the event markets successfully cross below that point, we will probably shift down to even test 91.76. So we don't even have to worry about the dollar going to 91.74 until we get below 92.45. So that's not critical yet. What's critical is right here. And through that point then makes that critical because we won't see 91.74 until markets successfully start crossing below their 4-hour trending support. And you can see for the past month or so, look, we go up, we come down, and at the time, the trend was up here on this dip. So we bounced the trend, we came down, we bounced the trend, we came down, we bounced the trend. So that is our support on the downward move. So until we cross below that, we will not see prices of 91.74. But if in the event we do, and we see this 91.74 and it breaks, gold and silver should pop pretty hard. So you can see right now that the dollar has been going up, say, over the past day or weekend. So we go take a look at silver. Silver's currently down this morning, gapping down as the dollar goes down. All right, and then the gold, we'll just show you quickly, is just basically trading sideways. There hasn't been enough, I guess you could say, action in the dollar down to really press gold up. And the worries of, say, a recession have kind of shifted gears to not so much because things all look happy-go-lucky for right now. But long-term wise, we should still see silver and gold outperform is the way it appears. So with that being said, ladies and gentlemen, that is your morning recap or morning breakdown. So I hope everybody has a great day trading. Thanks for tuning in. I'll see you guys on the next one. Take care.